Hello everyone, welcome to my channel. As a longtime BPC consultant, I have a love-hate relationship with BPC. When I first registered on ChatGPT, the first question I received was about why BPC, as the most widely used consolidation system, is criticized by many people. Ari's answer can be summarized in 3 points: expensive, difficult to learn, and difficult to use. We won't discuss the expensive part, but we can explore the other 2 points in more depth. Firstly, the difficulty of consolidation lies in business operations. Issues such as equity offset, intercompany offset, and revenue cost offset are all challenges in the accounting field. However, for customers who are immersed in their business area year-round and repeatedly study it, they should not have too many problems with their business. Otherwise, they cannot stabilize in their respective positions. On the other hand, the difficulty lies in system operation, complex business processes, massive and complicated underlying business data, and a series of complex tools that can give people a headache. However, with a properly deployed consolidation system, customers' need for system operation is limited. Once the system becomes mature, as customers gradually deepen their understanding of the system, data processing issues will gradually decrease, and the difficulty of use will also gradually decrease. The user experience should get better and better. However, the reality is that many customers who have already implemented the BPC system will shake their heads and sigh at the mention of BPC, rather than giving it a thumbs up and saying that this system is really good. Later, when discussing these issues with some key customers, I recalled that in the past, when manual consolidation was carried out, related offset data would usually be generated through the scrutiny of each business. Although it was time-consuming and labor-intensive and could not be very accurate, key customers usually had a consolidation draft that was very compatible with their own offset methods. On the one hand, the integration degree of offset data is high. On the other hand, the matching degree between offset data and draft is also high. Customers are also clearer about the problems that may exist in the offset data. With these prerequisites, key customers have more confidence and certainty when facing important scenarios such as audits and reports. However, the BPC system is based on account offset, achieving offsetting of individual vouchers according to explicit offset rules. This system function, which is almost impossible to achieve at the manual level, is a huge advantage of BPC. But it also raises a question of how to conduct quick and effective queries, error correction, and analysis for massive amounts of data integrated from business data? Faced with such a large amount of data, customers mostly filter some business tests before checking if there are any problems and then choose to trust the system. This leads to key customers responsible for relevant businesses feeling bewildered when auditing or finding issues accidentally. They can only explain that this is the result of system processing. Then they will urgently contact consultants to find out the reasons, and the best-case scenario is just an unnecessary alarm. With such scenes happening frequently, customers' attitudes towards the system naturally become worse. In fact, the problem of consolidation reporting for multinational enterprises has existed for many years. From report offset to account offset, with the gradual requirement for data accuracy, underlying report data must inevitably increase in number. Without information technology support, manual consolidation under such data scale is simply impossible. Nowadays, systems such as SAP BPC enable accurate account offset, and can be said to provide the data foundation for modern large enterprises' fine-grained management. However, compared with other modules that belong to mature SAP suites such as FICO, MM, and SD, which also face huge amounts of underlying business data, what is the problem with BPC? Careful observation reveals that internal modules like FICO are subdivided into several branch modules according to various business branches, such as general ledger management, asset management, project management, fund management, budget management, accounts receivable and payable management, etc. Each branch module has relatively independent processing flows and query methods. This subdivision and matching with key users' responsibilities allow for quick access to data that has been subdivided while implementing a screening mechanism for invalid data and improving the efficiency of data queries and analysis. Then, how should BPC achieve similar business subdivision and rapid query and analysis capabilities like FICO? The main output of the BPC system is reports, and these reports themselves have clear and strict type classifications. With this classification, what we currently lack is a quick access channel to fine-grained data. If we think of each report as a building complex and each piece of data within the report as a building, then what we need now is to open a door for each building, allowing customers not only to see the building but also to walk inside and understand every detail of it. Returning to BPC, if we can split out highly integrated data from the merged reports, and if this split can support multiple dimensions and granularities, it will be like letting customers walk into a data treasure trove and find what they need on their own, truly maximizing the value of the system's rich underlying data. Now let's enter the system and see if the data parsing function can realize the above vision. What we see now is a consolidated balance sheet that has deployed the data parsing function. We select the cell on the report that needs to be analyzed, right-click the mouse, and find the data analysis option in the pop-up menu. There are 3 submenus under data analysis: hierarchical analysis, YOY audit trail analysis, and complete analysis. YOY audit trail analysis and complete analysis are one-time special parsing, which we will explain separately later. Hierarchical analysis is the main function of data analysis and is further divided into age analysis, audit trail analysis, interco analysis, entity analysis, and account analysis, depending on the report business perspective and underlying business data structure. Entrants such as asset analysis, project analysis, contract analysis, etc. can be added. Hierarchical analysis can be understood as different perspective views of the buildings we described earlier. For example, when we select age analysis on the receivables corresponding to the console after column report data, the data for different aging of the group after offsetting will be displayed. Return to the consolidated balance sheet and select receivables again. This time, we will perform audit trail analysis, which will parse out which receivables data at the group level are integrated by the ERP, which are generated by offsetting, and which are generated by reclassification. Returning to the consolidated balance sheet again and selecting receivables, this time we will perform interco analysis, which will parse out all customers with remaining balances after offsetting at the group level as well as their corresponding balances. Interco analysis supports multi-select analysis, so we can select the ELIM before, ELIM, and console after columns of receivables data by pressing Ctrl on the main sheet, and then perform interco analysis. The result of this analysis shows how much the receivables balances were before offsetting, the offsetting amount, and the remaining balance for all trading partners, enabling us to check whether intra-unit transactions have been offset and whether external units and divested subsidiaries have not been offset. Now let's take a look at entity analysis. We still select receivables and perform entity analysis, and the result shows all units with remaining balances after offsetting at all subsidiary levels of the group and their corresponding amounts. Entity analysis also supports multi-select analysis. If we simultaneously analyze the data in the ELIM before, ELIM, and console after columns for different subsidiaries, we can see the share of intra-subsidiary transactions. Finally, let's take a look at account analysis. Because the test environment has relatively few detailed accounts related to receivables, we will select the fixed assets report item for account analysis. The result of analysis out the balances of detailed accounts, including liquidation and depreciation accounts, to which the fixed assets belong. Lastly, let's take a look at the comprehensive use of hierarchical analysis, which means using multiple different perspectives for analysis in a single query. Since each level of hierarchical analysis supports further subdivision, we can achieve multidimensional analysis from coarse to fine. Returning to the consolidated balance sheet again, we select the console after column of receivables on the report. First, we perform interco analysis. There exists a large negative amount of data with no trading partner, and we are curious about this data. So we select it and right-click to bring up the data analysis menu. We select account analysis under the hierarchical analysis option to see what accounts constitute this data with no trading partner. The result shows that the bad debt reserve account is the main contributor to this data, but there is still 2,000 under the receivables account at the highest level. Then we continue to see which subsidiaries' receivables these 2,000 with no trading partner belong to. We select these 2,000 and perform entity analysis. The results show that they are the data of the group headquarters. Finally, we need to confirm whether these 2000 were generated from the front-end business system, reclassification, or manual adjustments. So we select these 2000 in the entity analysis interface and perform audit trail analysis. The result shows that this data comes from the front-end business system. Thus, the remaining task is to go to the accounting system and check if there are any problems with the accounts. This example fully demonstrates the comprehensive query capability of hierarchical analysis. As long as the deployed analysis function is present, we can perform multidimensional analysis for every data point on the report, meeting different granular custom query needs. This is all for today's introduction. In the subsequent videos, we will explain and demonstrate analysis operations in scenarios that have practical business significance.